Good afternoon, everybody. My name is Sam Cross. I'm the Audit Manager for the Texas State Comptroller's Office here in Lubbock. I've been with the Comptroller's Office. This has been my 24th year in November. It'll be my anniversary. So I've seen a lot, done a lot, but I'm here today to hopefully be on the preventative side of the business of taxes and helping educate you a little bit more about what your responsibilities may or may not be. You may not have responsibilities with taxes and so forth with the State Comptroller, but this way we can at least talk about it if you do, and how you acquire or become permitted or get engaged in business, or determine if you're needing to have further actions with us. So first off, again, Glenn Hager is the elected official. Glenn's been with the agency, been over the agency for some time now. He's a great boss. He's got a tough job. So from 1 to 20, what do you all think the value of our economy is compared with the rest of the world? Where do we rank? Where does the Texas state economy rank as far as are we number 1? Are we 20? I see a 6. I see a 5. I see a 12. Anybody?
Number 1 in my mind.
Last count was 8th. 8th largest economy in the world. Larger than Australia, larger than Europe. So we have a lot of imports and exports come out of our ports and things like that. And COVID, we were opened up a little bit earlier than others, and then some people said, yeah, we're going to forget California, we're going to come down to Texas, and we're going to enter that way and try to sell our goods. So Texas is very pro-business, so I'm not here to rain on anybody's parade and say, that's not what my job is. So whenever you hear the word audit, and that's what I do, I hope that you can walk away with it if you are ever audited. If you're ever audited, I hope you walk away with it either saying an affirmation that you're doing it right, or you're understanding what your responsibilities are going forward. My job is to promote voluntary compliance and make sure everybody's playing by the rules. So it's not to play I gotcha. We don't promote people based on how much money they assess. That's an improper motivator. So it's really about just helping you. And then also, if you've paid tax in there, we'll give it back to you in an audit. I know that sounds strange, but we do. It's all about doing a quality and efficient audit to find out if there's any compliance. If there's not any, go down the road. I can't think of any time I've ever been pulled over in my life and where somebody told me, I got pulled over by police and said, hey, good job not speeding, So I'm sorry, I don't know. I mean, whenever we generate audits, it's not because we think you're doing it right. It's a matter of sometimes it's just something's an anomaly there. So if there's nothing there, we go on and we try to be efficient about it, because if you're doing it right, we want to let you go on with your business and leave you alone. So a couple of things. Disclaimer, the presentation provides general information about the Texas State Sales and Use Tax as of the date presented today. It is not a comprehensive resource on the subject covered. Any references to taxability, administrative policies, laws, or rules are subject to change. This presentation is not substitute for legal advice. I'm not an attorney. I'm not a CPA. So the Comptroller's Office is Chief Fiscal Officer, Accountant, Revenue Estimator, and Treasurer for the state. We administer over 60 taxes, fees, and assessments. I didn't realize how overtaxed I was until I worked for the Comptroller's Office. So, do you know we have an oyster tax? I didn't either until I worked here, and it's by the pound, but it helps. The monies go towards protecting our coastal waters because we like clean food. Things like that. Obviously, sales tax is a bigger one that's part of our daily lives. Fuel tax, whenever you pay it at the pump, it's just included in the price. Motor vehicle tax, when you buy that brand new car and you go down to the tax assessor collector, you pay motor vehicle tax there. We make sure that those taxes that they collect are administered back to the state. So we process an estimated 5 million tax returns annually. Our other job is to educate taxpayers on tax laws, rules, and their responsibilities. That's what I'm here for today. Providing taxpayer service to promote voluntary compliance. That's also why I'm here today. Collecting delinquent taxes. That's what I'm not here to do today, but it is a role that I do have part of. We have 24 audit offices, 18 enforcement offices. We have a very excellent website, and we have a dozen toll-free numbers that you can call for assistance that's unique and all that. So some people say, why do we have so many more audit offices than enforcement offices? We actually have audit offices in Chicago, Tulsa, LA, and New York as well. The reason being is it's more cost effective for us to have staff housed there that live there in the regions than it is to pay the travel costs back and forth from Texas. So we just worked out where it was more efficient, and we go where the records are rather than people boxing the records and shipping it to us or having to travel all over. So we just try to be more efficient and more economical about where the monies are being spent and the resources and so forth. But a lot of information that's usable is on our website. So I'm going to kind of go into a couple of rules, talk about that next. So our rule is 3.286. I don't expect you to know this by heart, but I just want to give you the legal reference where it is. So engaged in business, a place of business, the seller, the permit requirements, collection, remittance of tax. So those are the rules. So, sorry. There's a lot here, but engaged in business. So what does engaged in business mean? So under the statute, engaged in business means you have more than 2 tax events a year, 2 sales a year. So anybody ever had a garage sale in Lubbock, Texas? Ever hosted one? Did you know you're supposed to go down to the city and get a permit? How many permits are you allowed a year? 2. Why? Because 2 sales a year is not engaged in business, but that 3rd sale means you're engaged in business. And that's why it is that way. So that's what engaged in business means. A place of business. It can be a lot of things. It could be your home. It could be a commercial location. It could be itinerant where you go and travel to different trade shows, things like that. That's another place of business, wherever you're transacting commerce and things like that. Could be out of state. Is anybody here based out of state? Everybody's local? I kind of figured it would be, but if you're based out of state, but then you come into Texas, you have what we call nexus, meaning that you have an obligation to abide by whatever laws in our state occur. There's a recent court decision that came out called related to economic nexus. Anybody ever heard of Wayfair catalog company? Saw the furniture? So during, I don't know the exact dates, but what happened is one of the Dakotas took Wayfair to court, and it actually went to the U.S. Supreme Court. And what they were suing for is that, Wayfair had an obligation to collect sales tax on anything they shipped or delivered into their state. Even though they didn't have a physical presence or employees in that state, they would ship everything through common carrier, UPS, FedEx, or another freight liner. So most states traditionally go off of what they call physical nexus, meaning you have a physical presence, like you came into that state. So what that court case did is it changed it, and the Supreme Court says, well, you actually have substantial economic nexus, meaning that you derive a lot of your revenues from that state. Even though you're not in the state physically, you still have an obligation, in our opinion, to report and collect and report sales tax to that state. So Texas is adapted to that as well, with that based on that new language in the courts, and that the courts ruled on about economic nexus. Because what happens is, if you didn't have economic nexus and they weren't charging sales tax, then whenever we conduct our audits, there's another component called use tax, and I can get into that a little bit later. Use tax basically is where you didn't pay tax on something, but you brought it into Texas. So if you've ever bought something, anybody ever traveled to a foreign country and come back in a declared value on something? Anybody get a bill from the state controller's office for what you declared? I did the first time I went out of the country and came back in. I declared like $600 worth of value, but I got a bill in the mail for tax. So before I ever worked here, so I got a bill in the mail, and they said, hey, you owe use tax on this. About $400 or $500 worth of use of value, and then they got a bill for like $5, $6. That's what it was. So use tax is where you should have paid tax on it had you bought it in Texas, but because you didn't pay tax on it whenever you bought it outside of Texas, you owe the tax now. So that's where that comes into play. Place of business, again, could be anywhere, could be your computer. If you use a online retailer, I think Etsy's a popular one, Amazon, eBay, those kind of places. They have different arrangements with them on who collects the tax and who remits it. So be careful about that. I think Shopify is another one that's kind of popular these days. So just pay attention to those arrangements, like who's collecting the tax, because what happens is sometimes what they'll do is they'll give you all your proceeds plus the sales tax, less their commissions. and then you're responsible for reporting it, or they may choose to report it. I believe Amazon reports it on their own, and eBay and those kind of things. So permit requirements and information. So getting into that, each seller must have a tax permit for each active place of business. So whenever let's say you're going to have a store at the mall, but you're also going to have a store at your house, or you're going to have an online store, you need to have a permit for each active location. You'll get a separate permit for each location. Yes, sir.
So seller of a product that's different from the seller of a service?
So both the same. So there could be a taxable service. There may not. Some services are taxable, some are not. So like if you're, let me give you an example of a non-taxable service. So like car washing and automotive repair is not taxable, but automotive customizing is a taxable service. So like getting your hair cut is not taxable. Those are considered personal treatments. Massage, beauty, things like that are not taxable services. But some taxable services are like lawn care, getting your yard mowed, and somebody cleaning your house that's not an individual. They would then be a household employee of the household, but then you would have federal tax responsibilities unless they charge you sales tax, if you will. Most companies do that way. Yes, ma'am.
What about like admission into like a museum?
So admission is an entertainment service. That is taxable.
That is taxable.
That could be taxable, yes.
So if you're selling a non-taxable service, you don't need a tax permit.
That is correct. Or a non-taxable good. There are a few things that are not taxable by law. So like husbandry, like horses, and things like that.
Yeah,
Cattle. Yes, sir.
Yeah, you mentioned the services. I kind of have a unique thing where I basically do 4 different ones. Would any of the following ones would be taxable in terms of services? One, I'm a commissioned notary.
Mm-hmm.
That also I do media relations, creative writing, and clerical services. Are all of those taxable under the law, I'm sure? Or?
Without doing some research, my gut says no, like clerical services and things like that. Now, are you providing a written document in return? Could be data processing, data entry. Those things are taxable services.
Data processing, but probably none of the others may not be.
Yeah, notary would not be a taxable service requirement.
Notary would not be taxable?
No, sir.
Okay, because I've been having that's been probably one of the points of confusion in terms of services, because I also have book publishing on that, and I pay that as kind of what I consider my cost of goods sold because of that. So that, I know that's taxable, but I've got all kind of confused on the service side.
Right.
And wondered if any of those would be, any of the service part of the business side would be taxable.
Yeah, there's lots of variations, and there's lots of what's taxable, what's not, and it'd probably be good if us to talk one-on-one on that, or at the end of the presentation, I can kind of circle back to those individual specific questions about that, and I can kind of maybe even poll everybody and see what they're doing and kind of give them a direction.
Yes.
I'm happy to do that.
As general principles, is it more like whenever you say services, is it kind of like someone like a customer would consume every day, is what I heard, like you said, lawn care or things? Is that kind of more the gist?
That's one of them. Window washing, pressure washing of a building, preparing food, restaurants. That's a service to some degree, even though you're getting a tangible good. Things like that. Customizing of a vehicle is taxable. Real property construction services or real property repair for commercial is taxable. Residential. So if you pay somebody to fix your roof at your house, the labor is not taxable, but the materials are taxable to somebody. But if you hire somebody to repair non-residential, a commercial building like this, it's a city's, but it's exempt. But if you hired somebody to repair the Wells Fargo building down the road, the labor and materials are both taxable then.
So the other factor then is like whether or not it's the services you're performing is residential or commercial. Is that one of them?
That's some of it. It depends on which part of the law. So it's kind of like if the law says that green is purple, then it's purple. You know, that's if the law says that. So even though it doesn't, there's no real there's no real predictability, if you will. So like raw food, whenever you and I go to the grocery store and buy carrots and celeries and onions and raw meat and things like that, and sandwich meat that's not ready to eat right then and there, that's not taxable. But the moment that a restaurant serves it prepared, ready to eat, it becomes taxable, even though it's food. But because the law says raw, unprepared food is not taxable.
This is kind of news to me because I've been paying it on the service side and whenever I've had it, and I've been kind of wondering.
Yeah, and we can circle back to it. We can talk individually, and we've got a booth out there, and Rob and I are both out there, and we can look at. We'll be better armed if we have our computers with you, where we can show you, the statutes and the law a little bit on that. So again, back to the permit. If you have multiple places, you'll need to get a permit for each location. So think about your larger convenience stores that remember all the 7-Elevens that used to be in town, but now they're not. Each one of those have to have a separate permit. So what that looks like is this. So there's a place of business. Jane Doe is the owner. Jane's Place, 111 East 17th Street. The NACE code, which is the industry classification. And then it talks about the description. It's a pre-recorded tape, compact disc, describing the business in general. The effective date of the permit is January 1st, in this instance, 2015. And then sales and uses tax permit. And then up here where it says location number, that's location number 1. So if you close that business and reopen another outlet, it's going to be location number 2. So we do want to track it. Now, if you close a location and for a time, maybe a year, and then you reactivate it, you're going to get a brand new permit. A brand new permit number, outlet number, if you will, as well. Yes, sir.
You said everywhere, so you talk about vendor events, so you need one for every vendor event?
Right, and then you don't need it for the event, just for yourself, because we have a way of classifying somebody as whether they're itinerant, a traveling, a business, if you will, where they don't really necessarily have they're going to use their home as the base. It just makes an obligation for you to charge tax based on where you have the sale. So
Selling at home and a vendor event, I need 2, one for at home and one for.
no, you would be what we call it's called a list filer, where you're going to list how much tax you charge for the state, how much tax you charge for the city, or the county if it's due, because you can have up to 5 taxing jurisdictions on every sale. It's pretty complicated. So for example, in Lubbock, there's state sales tax, which is 6.25%. Lubbock City is 1.5%, and then Lubbock County is 0.5%. So for all sales inside the city limits, but if you're based outside the city limits and you come into the city limits, you're obligated to collect city and county, not just county. And when you're out in the county, then you're only going to charge 6.75% because you have state and county only. So.
If you were to go to a vendor event in Colorado, you have to have them sell tax for there.
Well, you have to check with that state. I have enough to deal with Texas. Every state is complete.
I know some people who've done vendor events in different cities.
Sure.
States, so I just thought.
Yeah, and I'll get into the reporting later, and all you're really going to do is you're going to have the gross sales that you're going to report, which is all sales, including other states, and then you're going to have the taxable sales, the amount of sales that are subject to tax in Texas. So we can break it down that way. So again, you'll have a permit, and this is what the permit looks like. Looks like Texas flag. And then on the back, just some general information. Why this is important, because some of your vendors that you buy from may require that you provide them a copy of this along with a resale certificate to show that you are truly permitted. So it helps them have more belief that you're permitted and able to be classified as non-taxed on their system if they want to globally make your purchases from them. So if you ever buy from Sam's or something like that, I don't know if y'all have ever been to Sam's. If you have a commercial or business account with them, whenever you ring up the sale, the first question they say is this for business or personal? And then that makes a difference. And you say, well, this one's for personal and this one's for business, and they're going to ring you up separately because one's going to be taxed and one may be for resale. And that's why on that. So the next rule I want to advise you of is this is what I deal with. So who loves doing dishes at home? Sign me up, right? Is it lying? So bookkeeping is kind of like doing the dishes. Nobody likes to do the dishes, but we all like to eat off a clean plate, right? So, yes, you must keep records. Records must be kept for 4 years. You must keep exemption and resale certificates to go along with those sales. So if you were obligated to charge sales tax on a sale, like say you sold 500 t-shirts to a sorority house, you should have that exemption certificate on file to show why you didn't charge them tax. And you need to maintain those. What a lot of folks end up doing is they just file them alphabetically and they keep them in a binder. And then they have them and they just keep them perpetually forever. And that way they're already there. And then if they ever need to see if somebody has an exemption certificate, or if you're ever audited, they just pull down the binder. Here you go. So your records must reflect the total gross receipts from sales, rentals, leases, taxable services, and taxable labor. Keep records of any deductions authorized by law. Your records must also reflect your purchases of taxable items. So this is where we get into use tax. So any questions about record keeping before I go on? So keep it for 4 years. I'm not sure what the IRS rules are. It used to be 7 years at one time, but I'm not as familiar with that one. Yes, sir.
Can they be kept digitally?
They can be kept digitally, yes. I mean, not a problem, either one. My only advice on that is to make sure you back up. And I know with the advancement of a lot of cloud services and things like that, you know, with subscriptions that you have to pay, we've seen it where, you know, I just decided that I don't want to pay for my cloud service anymore, so they hadn't paid it for years, and then they've lost all their records. And then some of those cloud services say, well, we've got them still if you want to pay all your fees to catch you up. So my advice to you is to maybe keep a backup of your digital stuff that's independent of a subscription service, if you will, in case you decide to go with somebody different. Because we all forget. It's easy to like say, I'm going to go with somebody cheaper. I'm going to move from this vendor to this vendor for cloud services, and something happens, if you will, like that. All right. So use tax. Use tax is a tax on the storage or use of taxable items obtained outside the state and shipped or brought into the state for use. Use tax also applies to items purchased outside the state and delivered in Texas at the direction of a purchaser who is engaged in business in Texas. You cannot collect state sales and state use tax on the same transaction. So use tax is a tax paid by the purchaser. Sales tax is a tax charged by the seller to the purchaser. Both are paid by the purchaser. So to give an example, so anybody use a point of sale system? You know, I'm not saying that this is the one, but like Clover's a popular one right now. I think Toast is a good one for restaurants and things like that. So I'm not saying these guys did anything wrong, but if you bought a point of sale system and they aren't based in Texas and they shipped it into Texas and they didn't charge you any tax on it, then you're obligated to pay the tax on that. And there is a way for you to report that, and that's on line 3 of the return, and we'll go over the return here in a little bit. But that's where you're basically saying, I should have paid tax on it. Or the other example of use tax that really, this will make it click for you, is if you're a merchant and you have all this product on the store and you say, I really like that red Stanley mug cup that I got up there on the shelf. I'm going to go ahead and take that home. It's where you became your own customer. You paid use tax on it. Now, are you going to charge yourself full retail price? Use tax is only due on the cost. So if you take something out of your inventory that was available for sale and you decide that you're either going to give it away or use it yourself, then you became the customer of that good. That's what use tax really equates to.
So like a giveaway.
Yeah, exactly, a giveaway. So like, I mean, if Walmart needs tape, they go and get tape off the shelf, and then they tell their manager, and the manager puts it in the write-off bin, and then there's an accounting process that says, hey, we need to pay use tax on this. How much did it cost us for this duct tape? We're not going to pay tax on the $10 retail. We're going to pay use tax on maybe the $7 cost. So that kind of helps people solidify it a little bit better on that one. That's how that works. And then this is probably the most important one that a lot of people don't think about. Whenever you guys, anybody bought a home in the last 3 years? We all want a clean title to our home, right? We don't want to have a hiccup where we don't get clean title and it's not our house later on. We find out there was a lien on it. We didn't like that. So successor liability, if you're buying an existing business, the inventory of an existing business or the name and goodwill of an existing business, you become personally liable for any tax up to the amount of the purchase price owed to the state by the business you purchase. Before you buy a business, you will want to determine if the owner owes any state Texas taxes. When paying for the business, the buyer is required by law to withhold the amount needed to pay an existing Texas tax liability. The amount withheld cannot exceed the purchase price. So why is this important? So let's say you buy a business and you find out that they collected $50,000 worth of tax that they did not remit to the state. You become personally liable for that. Even if it's a sole proprietorship between individuals, you can become liable for that. So the process that if you want to write this down, if you're going to buy certificate of no tax due. So what that is you and the seller, the buyer and the seller, jointly requesting an audit. Now, what the state will do is they can either choose to audit the business and issue this and wait for the results of the audit, or choose not to audit the business and go ahead and issue the certificate of no tax due. Once the certificate of no tax due is issued, the purchaser of the business is released from liability. The seller is still not, but the purchaser is. So if you decide that you want to buy ABC Restaurant, and ABC Restaurant says, hey, we're going to sell the business for $100,000, and then you say, well, let's get an audit done, and you find out that ABC Restaurant had $20,000 in tax collected not remitted, as the purchaser, you're going to withhold the $20,000 so that the debt can be settled with the state. Kind of like closing. You know how they hold back the money so that they can pay off the other loan before they get the new loan? Similar concept there on that. So
What's the cost for ordering a certificate?
0, other than the taxes and fees that would be due. Our audits are free. We don't charge you for the audits. It's only for the tax that may have been due. And we don't charge you if we give you money back too. We give you interest. We give you credit interest back. If you paid it in there, we want to give it back to you. So, if you're going to buy a business, this is a good thing to do. I encourage you to do it. So, and that way you're operating in the open air. The seller and the purchaser are both going into it. If the seller gets squeamish about it and doesn't really want to do anything, I mean, that's up to you to decide if it doesn't sound like a good thing to me. If you're not willing to provide the books and records for somebody to audit, I don't know if I'm jumping into something I shouldn't be. So that's where I encourage you to request a certificate of no tax due. And I can show you all that a little bit later as well. So, any questions about buying a business or a certificate of no tax due or successor liability? It does happen, and let me go back. It is up to the purchase price of the business, but if it's a sham transaction where you sold the business for $1 that was actually worth a lot more, then there is no liability limit. If we can prove that there is a sham transaction, then we would pierce that purchase price limitation on that. It does happen, not often that I've seen in my career, but it has happened. So make sure that there's a fair evaluation on the business and understanding. Right? All right, accounting methods. Anybody an accountant here? Nobody. There you go. There you go. All right, so for sales and use tax purposes, retailers may use a cash basis or an accrual basis or any generally recognized accounting basis that correctly reflects the operation of the business. So cash basis means that you don't pay sales tax or remit, you don't remit sales tax to the state until you've been paid. So if you did work for $10,000 and you charge $825 for the tax, you don't have to remit that $825 worth of tax that you collected until you've been paid for it. Under the accrual system, you would remit tax based on the invoice date. So if you invoice today in September, then September's return is due the 20th of the following month, which is October 20th. So what it is, there's pros and cons. I mean, everybody's got a different opinion about it. So if somebody didn't have the capital to be able to carry somebody else's tax until they got paid, then cash method's probably a good method for you. If you're doing so many and then you have a pretty good turnover on your accounts receivable, where your accounts receivable aging is like under 30 days, where you can afford to do the float, then by all means. I really don't have it's really up to you all, as long as you're consistent with your methodology. Most people elect cash method because they don't want to remit tax until they've been paid for it, because they don't have the back savings, if you will, especially when you're first starting out. It's kind of hard. Things like that. So if you did, let's say you're a contractor and you did $1 million job and you've been paid progress billings for a little while, but it was all taxable, you don't have $82,000 in tax to just pay it until you get paid for it. All right, this is where I come in again. Rule 3.282, your records may be audited to determine whether you have paid the correct amount of tax. The audit may determine that you owe tax, that you are entitled to a refund, or that you have paid the correct amount. Generally, you may be audited in 4-year intervals, thus you're required to keep records for a minimum of 4 years. Again, the only time we ever pierce the 4-year time limit is if we have evidence of fraud. But again, 4-year reminder, keep your records for 4 years, digitally, paper, however. Anybody remember anybody have thermal receipts that you left on your dash and you saw them get completely just blacked out, worthless? Man, get those things stored away. Don't put them in a hot attic. I cannot tell you how many times we see those receipts and we're like, we try to make it out if we can, but if it's completely just garbage, it's hard. So then we have to go with alternative sources, maybe a bank statement that might be able to give us an idea of what was purchased, or a credit card statement. But we try to be fair and not just say, but take good care of those records. Again, it's kind of like doing the dishes, I know. But there's a lot of tools that are available out there now. I mean, after COVID, I think online resources got really good in the ability to do that. Just make sure you're keeping your subscriptions up. All right. Talked about this a little bit earlier. Texas sales and use tax, the rate is 6.25% for the state. Local taxing jurisdictions, cities, counties, special purpose districts, and transit authorities may also impose sales and use tax up to 2% for a total maximum of 8.25%. So if you've already paid 8.25%, well, let me say it this way. If you bought something outside, let's say you bought something in Midland County and it was outside the city limits, you paid Midland County, you paid Ector County or Midland County Hospital District, which is another 0.5%. So if you brought that back to Lubbock, because Lubbock city tax is 1.5%, 6.25%. So state tax rate 6.25%. Midland County is 0.5%. Midland County Hospital District is 0.5%. So that makes it 7.25%. So if you brought it back to Lubbock, you would not owe the use tax on Lubbock City, because the extra 1.5% would exceed the 8.25%. Does that kind of make sense? So there's no proration of well, let me figure how much the 8.25% would have been and back into it. That's only done whenever we give credit for taxes paid legally due to another state. So, but if you buy something out of the county, but you buy it Midland, Ector County, that's an example, it's closer for me, then you may not owe the additional use tax on it. So that's why you have to kind of pay attention to those rates about what's legally due and what's not. In case you are having a back office that does keep up with use tax and things like that. You'll be required to collect and remit both state and local taxes and use tax when applicable. So some states have their state tax, and then each local jurisdiction that you go to, you have to file a separate return with them. So I know in Oklahoma they have a tax there, and then each city used to require them to have separate permitting for each city that they went into. So you can have 4 or 5 returns due every month. So what the state of Texas tried to do is try to have it where it's one central location, and then every month we've rebate back the taxes that were collected for those local jurisdictions back to those cities, counties, and special purpose districts and so forth. That's how that's done. All right, our returns can be filed in person, by mail, or via the internet. No tax due returns can also be filed over the telephone by calling the phone number listed there, 888-434-5464. Returns are due monthly, quarterly, or yearly, and it's based on the qualifications on the 20th day of the month following the end of the period. So the reason why it's monthly, it depends on how much sales tax you're collecting on a monthly basis. So there's different thresholds. So it'll be monthly, quarterly, or yearly. And depending on how much revenue or how much tax you're going to be collecting, that'll be the determination of how often you'll file. And then returns postmarked on the due date are considered timely. So as long as it's postmarked on or before the due date, we consider it on time, even though it may not have been received for 4 or 5 days after you mailed it. Why is that important? 1 to 30 days late is 5% penalty. Plus $50 for filing late. Just for not signing a piece of paper on time or filing online on time. 31 to 60 days late is 10% penalty. 61 days and further is interest plus the 10% penalty, plus possibly an additional 10% determination penalty, making it 20% penalty. So, again, sales tax is a trust fund tax where you're collecting it and putting it in trust. What some people do is they have 2 separate bank accounts. They have the bank account for the business money, and they have the bank account for the tax money, and then they just split it off and put the sales tax, and that way when it becomes due, they've always got it there. They don't have to worry about not being able to pay and file on time. Our website is www.comptroller.texas.gov. The Texas Comptroller's Office offers virtually all of its publications online. Additionally, we offer online services such as web file, local tax, rate search, sales tax account update, and certificates of account status. Resources such as STAR System and the Texas Business Advisor are also available. So I'll get into a little bit about what those are in a minute. But our website is designed to be accessible, usable, independently, where you can do most everything you need to do online. If you want to apply for a business permit, you can apply online. The only thing we need you to do is do the signature page that goes on it and send it back. You want to pay or file a return online, you can file a return online, and they can do a direct withdrawal from your bank account. If you want to research what your business is subject to as far as taxes, the rules, the statutes, and the publications are all out there as well. This is what the website looks like when you get on one. Up here at the very top, it's kind of brightened out, but right up here, there's a search box. It's really great. You can type in your words and try to say, I want to find out taxability of baked goods. You put it on there, and it's going to pull up a lot of articles, a lot of research about it. It's going to give you a general direction of where to go. Likewise, if you're saying taxability of notary services, then you can put that up there as well, and it'll give you some guidance about that. Again, we administer over 60 taxes and fees. for the state. This is a list of all the taxes and fees. Anybody read your phone bill lately? 911 fee, all those things that are added on. Yep. We have a battery sales fee. We have a boat motor. We have a cement tax. Coin operated machines. Coastal protection is the oyster tax. Crude oil, severance, which is severance tax via oil wells. Hotel, insurance tax, loan fees. Manufactured housing. Did you know there's a tax on manufactured housing? Mobile homes. Again. Mixed beverage tax. If you go to a bar, there is a mixed beverage tax. It used to be 14% gross receipts. It was paid by the bar owner out of their pocket. That's why your drinks cost a little bit more when you go to the bar. But now, in the last 8 years, they have been able to at least recoup some of those costs, where it's 8.25% can be passed on to the purchaser, but then they still have 6.7% gross receipts tax that they pay out on that. Pari-mutuel wagering, property tax, we audit the appraisal districts to verify that their renditions and their property valuations are fair. I know that's subjective, especially in the last 3-4 years where we've had just crazy climbs, I know. Online, there's a virtual field office. It's a little bright. Sorry about that, guys. Can y'all see that okay? All right. So our services available online are 24/7. You can change your mailing address. You can move or add a business location. You can look at your account status, things like that. Start a new business. You can apply for a permit. It's kind of bright, so.
Yeah, we see it.
So I'm going to try to put my finger there. So right here above my finger, it says apply for a tax permit. Find helpful information. Other options. So there's phone numbers down here at the bottom as well. And my advice to you is to call between 8 a.m. to 10 a.m. and maybe 3 to 5, because those seem to be less peak hours. For whatever reason, I don't know. Oh, there it is. There's peak schedule. There you go. Best times to call are 8 to 10. Hey, I was right. I remembered. So they didn't do the afternoon. Maybe that's not anymore. So if you want to file your return, so anybody currently permitted for business or not yet? All right. So like the web file, tried it yet? Do paper? How do you file yours?
That's what
I will say that the website has been hunting, because usually most of the time, whenever I've had to file my returns, they've been at 0.
Yeah,
So that makes
that's fine. Yeah, as long as you file the return, because remember, there is a penalty for just not filing the return. It's $50. It's a flat fee. So always file it, and you can file it a couple of different ways. So there's a couple of different filing. You can file electronically through e-systems. You can also file paper. Now, what there is if you are over a certain dollar amount, then you are required to file electronically, pay electronically. So if you're required to report electronically, there's a 5% penalty for not filing electronically. And then you get a notice in the mail or a notice advising when you are required to pay electronically on that. We do have some good resources out there. Who likes YouTube? I do. I mean, how do I fix this? How do I do that? And somebody's done it. So we have some YouTube videos out there on how to file your return, how to navigate our website, how to navigate applying for a business. So the most popular one is how to file a sales tax return as an outlet filer. So that's out there. We have a really robust YouTube channel out there that gives good information, not just about how to file your returns, but also about our economy in Texas. So some good information that comes through on a lot of our newsletters. Did you know that we have one of the largest digital bit mining companies or bit mining facilities in Crosby County? I didn't know that until I read some of the fiscal notes that we have for the Comptroller's office. And I drive by there. It's a huge facility. So anyways, there's lots of interesting facts about that, and there's some regional economic news that are out there as well. So earlier talked about STAR. STAR is State Tax Automated Research System. So if you're wanting to know about, is notary services taxable, is retyping a letter or data entry taxable, or if you want to put it in there, what this system does is we've written letters over the years to individuals that ask questions, and then they typically start out as like this: Dear taxpayer, thank you for the information. Based on the facts you've presented, because these are all fact-driven. Based on the facts you've presented, this and this would be taxable. So, whenever you type in, if you type in hand soap, germ, it's going to pull up every letter that's ever had, every letter, court case, or rule or statute that's got those two words in it. That's what it's trying to do. It's trying to do a Boolean word search to try and locate these things for you, to try to help you get some information. And then there's an advanced option if you want to go into more like unique searches and narrow down a little bit further about some topics and things like that you can perform as well. So you can also narrow it down a little bit by, and I'll point to this. So some people, especially if you're in the accounting world or you're in law, you're reading what came out new. So you want to say what's been published recently. So if you're one of those people who wants to read most recent findings and say, I want to find things in the last 2 weeks, it'll pull up everything that's been published in the last 2 weeks there. All right, I'm gonna get on a good note here. How many of y'all have ever forgotten to get your deposit back from the utility company? Me. I'm there. How many of you had a relative pass away and they left all this money but they didn't have a will, or they didn't know you were their great relative? So claimittexas.org. I didn't bring my water bottle. claimittexas.org is the website that you can go to and find out if you have unclaimed property. Why is this important? Y'all ever worked at a job and you're like, I hate this place, and you left after like 48 hours? And they didn't know how to, I have. So they have an obligation to still pay you, but they didn't know that you had an uncashed check. Or you ever lost a check, or you ever not had something. Then what happens is they're required by law to escheat that to the state of Texas. And then we in turn try to get it back to you if you're owed the money. So all you have to do is go to claimittexas.org. You can type in your name. You can type in, even narrow it down by locations and stuff like that. So. Y'all, I have found money here, and it's amazing. So, yes, sir.
I had a claim on that. It was an insurance proceed.
Uh-huh.
You know how they do the dividends and stuff like that.
Right.
And it was like $100. So when I tried to claim it, they said I wasn't able to claim it.
How come?
So they just said I wasn't able to claim it on the website, and I filled out all the paperwork and everything necessary. And to this day, my name's still listed on there, and every time I try to claim it, it won't let me claim it.
Have you talked to somebody individually there? I'll call them on the phone. Well, there you go. There you go. No, really. I'm curious to know why they withheld it, especially if you sent off the forms that were notarized and all that's required. So.
You can do it all online. It's pretty much all done.
Right. So, it's really fascinating how much, $3 billion out there based on, that's not been claimed, that's somebody else's money.
I have a question for you.
Yes, ma'am.
Back in the days, way in the days, I used to work for, telephone solicitors.
Uh-huh.
And I worked for a gentleman, and he never paid us. But
he got caught in El Paso, and he went to court, and they said that they were gonna go ahead and pay everybody that he owed money to, but the thing is, that's a different state.
Oh.
So, I never did a research on it, but do you think it might still be on that?
It may not be on this, it may be on the other states. A lot of states have this unclaimed property.
Oh, okay, well, it's.
Most states.
You know, paychecks that they.
Right.
paid you.
Yeah.
Property, same thing, they tell me I have a property in Fort Worth that I bought a long time ago, I thought I sold it, but they say it's still in my name. So I was like.
You're my hero. Thank you.
So it's like, all right. Okay, I'll do that. So I'll probably have to go to the New Mexico.
Yes. And I know there's a couple of, this is free. Our website's free. I know there's other services that will charge you a fee to do it for you, but this one's free for you to go through.
And it's just for Texas, correct?
Mm-hmm.
Little different topic. There was a new law that came about where businesses were required to report who the owner is.
Mm-hmm.
And I think I'm required by the end of the year to report that. Is that?
You're talking about LLCs and
Yeah.
corporations and the like? Yes.
Is that a state thing?
So it's on the PIR report, the PIR report, Public Information Report.
Okay.
That lists off the officers and directors. So I have an LLC for my rental property, and I have to file a public information report listing the officers and directors, which is my wife and myself. And that way, then it's filed with the Secretary of State, and then the Secretary of State keeps a register of, and you can actually go out on our website and look up a company and then click the list of who the officers are. So
And where can I find that?
it's on our website. Yeah, under franchise tax. The franchise tax account status is probably the best one to go through. Yes, sir.
So, how can we can go onto the website to check if we have our tax permit, sales permit?
You sure can.
So, I have an LLC with the state, so I just go in and put my EIN in there, I'm assuming?
Now your EIN is driven by the federal government.
Okay,
Now, if you've supplied us with your EIN number, then we try to marry the two. Our tax ID number is 2 digits longer.
I'm thinking it's the Texas, I'm not sure what it is, but it's the one, that's associated with the franchise tax.
Right.
So that's the one that we will go in and plug that in.
Yeah, I mean, if you've provided us your EIN number, your tax ID number starts with a 1. If you haven't supplied your EIN number, then it starts with a 3.
Okay. But we can just go check to make sure if that sells and the tax permit is.
Yeah, it'll show you the different things that you're permitted for. You have the way to look up your account status to see if you're in good standing with franchise tax, which is what a lot of banks do. They want to make sure that your corporation's still intact and that your charter's not forfeited before they give you any lending. And then the sales tax side is see if your outlets are permitted, or look it up. You can actually look up the permit by address. It's a very good search tool. I mean, it's really good data that we have out there. We try to make it where it's one-stop shop for a lot of folks on that. All right, well, did anybody know if they have millions of dollars that they're owed back there or not? I'm telling y'all, I mean, when I had a father that passed away, and I used this, after he passed away, and there was like insurance monies. He had paid the records. We're not always the best record keepers, are we? So we don't, or we might have had that piece of paper filed away where we knew where it was, but we didn't know where our loved one had it. So that's what this is for, is to try to get this money restored back to who it belongs to. Now, if there was a decedent or something like that, and I think, whenever you file your claim, you may have to show proof of probate or something like that. Like that. All right. Other agencies to contact. So this is it's not an exhaustive list, but it might be some people that you want to talk with. Texas Department of Public Safety. Why would I call them? Well, if you need a security license, if you're going to be doing security stuff, you need to get a securities license from them. Department of Motor Vehicles, if you're going to be a car dealership, like our friends here at CarMax. Texas Alcoholic Beverage Commission, if you're going to be if you're going to have an establishment that sells alcohol by the glass. Department of Licensing and Regulation, That's some of that's related to elevators. There's various things if you have special permits, if you're gonna be handling dangerous animals, or if you're gonna be a pet store. I mean, there's lots of what ifs there. Department of Insurance, if you're gonna be selling insurance or insurance lines of insurance. Workforce Commission, you gotta have employees, you gotta pay your workforce, because it's expensive if you don't have that insurance, if somebody gets hurt on the job. Secretary of State, if you're going to form an LLC or anything like that. IRS, obviously for obvious reasons, you got to pay your taxes, your income taxes. And Department of Health. So, Department of Health, if you're going to operate a restaurant and need to get a health permit so they can allow you to certify your kitchen and so forth. All right. If you need to contact us, if you need help or have questions, please contact us by mail, the telephone, in person, or email regarding your account, tax return, taxes or fees, taxability, complaints, I get those, concerns, any other needs. And I'm going to give you our local audit office number. If you have questions about audit, if you're ever told, okay, we all know that sometimes scammers try to represent who they're other people. So on occasion, somebody will contact me and say, I've been told that I'm under audit. And I'm like, I don't know. Let's talk about it. And it's not very often that I get those, but some people say that to kind of gain access to business. So if you have doubts about whether you're under audit, if you actually get a letter from our office, or if it looks suspicious, if you really want to know, call me. Let me give you my number. This is my direct number at the office, 794-4012. And that's the office number. And then for questions about securing a tax permit, or if you have questions about filing your returns, or if you're delinquent or late or not sure about something, this is our taxpayer service number that's local. It's 806-796-7772. That is our local taxpayer service office. My office is open every day. Their offices are open. They're always accessible by phone, but then they close the office a couple of days a week, if you will. I think we've all experienced staffing shortages and so forth over the time, so we're trying to find a way to still do our work while still being accessible to the public. All right. Thank you for taking time out of your day for today. I'm happy to answer any questions that you got. I mean, it's like 2 minutes. I'm sorry. That hour went quick. Yes, ma'am.
If I do have a vendor like a craft fair, is there a limit, like under a certain limit I don't have to pay taxes, or is it just anything?
Well, it's not about paying taxes, it's about how much you're collecting. You're going to be collecting it. So if you're at a craft fair, you're going to be required to collect 2 tax-free sales a year. Like a garage sale, we consider that an event, one event. So what happens is a lot of times those craft fairs will actually ask you to show them your permit.
Okay.
We found out because under the law, the organizer of the event can be held liable.
Okay.
So,
Yes, sir.
let's say, you're doing like house calls for your business, like I do lawn care, right?
Okay,
So, I'll have to have a permit,
correct.
I'm assuming since I work out of my car. I'll
Right.
have to have a permit with me at all times.
No,
Just at my house.
we're not that sticklers.
But just to have one, right? I just have to.
Yeah, you just have to have one that's active and on file, and then bring up the lawn care. There's some certain exemptions that apply. Like if you're under 18 and over 65, you don't have to have a permit depending on how much dollar amount. So I mean, you're obviously between there. So yes, ma'am.
How about on the baking?
Baking. This is an interesting one. So whenever you go to a bakery and buy cakes, pies, cupcakes, the law says it's not taxable unless they have eating facilities and you eat there. Things like that. So
How about that dairy law?
A second?
The dairy law?
Okay, what about?
What is considered the dairy law? If something has milk, eggs, or
Well,
what category of the dairy law?
so like if you have a grocery store or something like that, then certain foods are exempt by law.
But how about at home? Like, I'm gonna be baking.
Oh, you mean the cottage law?
Yeah, was it called what?
The cottage law, cottage bakery. You're good.
Yes, so
Yeah.
do I have to get a permit and,
Depends on what you're selling.
really?
Yeah. Nope.
You know, I don't have to get a permit? Really? How about a tax?
Not a sales tax permit. You wouldn't have to because whole cakes and pies and breads are exempt by law as long as you don't provide an eating facility.
That's true. Okay, so, but it's okay for me to go ahead and get those permits just in case?
Yeah, but you'll have to register with the city, I would assume.
Which is fine, I don't mind, but,
And I don't know if you have to have, I don't think you have to have your kitchen certified, do you?
no, that I know. the
I'm
new
not
law
as familiar with
is-
that one.
The new law that came in, they said, you know, small businesses, they can go ahead and do it.
Yeah. And that was the cottage law is what one of my guys, his family owns a bakery, so they were pretty
See, that's,
knowledgeable about the cottage law more than I was.
that's what I wanted to know.
But if you go to a bakery and you buy a whole cake and pie, and as long as they don't have a table and sitting facilities and utensils to eat off of, then it's tax free.
I had a question.
Yes, sir.
Does that apply to like ice cream trucks as well?
Ice cream trucks are taxable. Sorry.
Oh, well, I thought he was saying it was dairy though, you know what I mean?
No.
There, he called it the color?
Nah, sorry.
Oh, you put-
Because it's got sugar in it. It's candy now. It's processed food.
So non-sugar.
Well, get this, y'all. Salted peanuts are not taxable, but chocolate-covered ones are. Because it's candy.
I know my son asked me these questions, he wants to have ice cream truck. So I'm like, do I need to, what do I need to get, you know what I mean?
But whenever you go to the store and buy ice cream and not in single servings, like in a pint, it's usually, I think it's tax exempt. So that's the difference there, because it's single serve, ready to eat. Portion sizes matter under the law. Yeah.
I was just curious about that.
Yes, ma'am.
So, if, like my kid was doing lawns before he turned 18.
Okay.
But now he's continuing after 18, he has to go get.
Yes. And if I think it's $1,000 if you're under 18, and it's $5,000 if you're over 65 annually. Because I mean, it's just a side hustle. We get it, you know, and you want your kid out there making a little money to help pay for their stuff. Maybe I got 3 kids, so I want them working. Anything else? We do have a booth all the way at the far by the entrance. If you want to come by and ask individual questions, you know, I'm happy to research what I can for you and let you know which way you need to go on some things and give you some tax guidance on that as much as I can, okay? I wish you all much success in your bravery. My parents had small business, so keep going. All right, guys.